Cryptocurrencies was just about to reach widespread adoption, but then something happened. Are they now worth nothing, as Christian Lagarde said last week, or is there some more value in it? Let's ask the audience first before we start with the panel discussion. Again, I ask you to use your handy, and then we have this question. Have you ever or are you currently invested in cryptocurrencies either through investment products or directly? Simple yes, a simple no. I will never invest into cryptocurrency, also a common answer. Or I intend to do it, but in the near future. So I'm very curious what the answers will be. And obviously, I ask you also at home, in the office, to participate in this small little survey. And again, also encourage you again to ask questions, which we will show 10-15 minutes before the end. So far, it worked very well. So thank you again for the many questions we have received, the first as well as in the second panel. So let's look at the results. 50% are invested. Very good, yeah. So we have a crypto interested audience here, live and also at home. Yes, excellent. Very good. So with that, I'd like to pass on to Sven Wagenknecht. He's the Chefredakteur and founder of BTC Echo. The stage is yours. You're set. Thank you.
Thank you, Rainer Buck, for the nice introduction. And it's great to see, of course, that the majority here is invested in crypto or is open to crypto. That's great. And I hope after this panel, even more people will go to crypto. And in this context, a warm welcome to our panel with the question if 2022 is the year of widespread crypto adoption. Given the poor start to the year and the major correction, not only at the tech stocks, but also at the cryptocurrencies, I would like to look which factors influence the prices and maybe which crypto products or how the crypto products should look like to convince potential investors. And to answer these and many other questions, I'm looking forward to our outstanding experts who have a lot of crypto knowledge on the one hand and a lot of expertise from the traditional financial sector on the other hand. And before we start with my questions, I would like to introduce them to you briefly. And first of all, I would like to welcome Mauro Castellini, who joined Bitcoin Swiss in July 2019 as CEO Bitcoin Swiss Liechtenstein, where he is responsible for the European business. Before joining Bitcoin Swiss, he was working at Bank Frick, where he has successfully implemented a corporate strategy in the field of blockchain banking. Then I welcome Ed Carlton. He's institutional digital asset trader at Flow Traders in London, which is a liquidity provider historically specialized in ETPs. And Ed is anything but a newcomer to the crypto sector, so he has been working full-time in the crypto industry since 2016 already, and prior to his position at Flow Traders, he was responsible for the OTC trading of BitStocks and BlockX. Next, I would warmly welcome Benjamin Dean, who is Director of Digital Assets in Europe at WisdomTree, one of the largest ETF and ETP providers. Previously, he has held a variety of jobs from cyber catastrophe research lead at insurer Hiscox or as consultant at the OECD. Last but not least, I'm looking forward to Hani Rashwan, who is the CEO of Amun and 21 Shares, which are known for their large range of crypto ETPs. The entrepreneur has already successfully founded several companies in the US, more specifically in San Francisco, and often with a focus on payments, so he's perfectly familiar with the challenges, especially regulatory ones, of the fintech sector. And of course, as in the last panels, feel free to ask your questions via Slido, so especially in the end, we will try to answer them. I'm really looking forward. And yes, so first of all, of course, I would like to talk about the market situation, which is not easy, definitely, and therefore, I would like to ask you, Mauro, how do you explain this sharp correction in the cryptocurrency markets?
Yes, this correction we have now seen in the cryptocurrency markets, especially during the last weeks when the big thing with Luna happened. We will definitely speak about that. I see it still as very positive because it was a correction that, from my perspective, was necessary. The market, in the bull market we had before, moved up quite fast. And we have seen similar things in 2013 and also 2017. And in the end, from my perspective, just the same thing happened. So we moved from this really big bull run to a correction. Are we now in a bear market? I do not know. But I personally see it as very positive to now invest, to now get in, to now bring your money in this market and profit during the next years. That's what I'm personally doing, what I'm very positive for at the moment.
Any further explanations?
No, I mean, I think as a liquidity provider and market maker, we can be semi-agnostic to the price move. We actually like volatility, so we're in a rather privileged position. But taking a step back and with some insights over the last kind of few years, I think these corrections, we've had several. This isn't the first time we've seen kind of quite bearish moves in the market or corrections, as they're often referred to. But you've also got to just not look at the primary delta markets, the spot, but also look at some of the infrastructure and how much the market has changed over, say, like the last 5 years in terms of the caliber of the exchanges, which are servicing the underlying, the caliber exchanges, which are now listing the ETPs, the picks and shovels, the custodians, and some of the other kind of ancillary service providers, which are now that make up this market infrastructure. It's really in a different position, and I think this more recent correction has seen a slightly different tilt in that there has been some price stability. There's been less kind of firms kind of going bust or kind of removing themselves from the marketplace. So a very different feeling, I think, that we're getting from within the industry. I think also mentioned it, Sanjay, that it's not just the crypto market that's having a pretty torrid time at the moment. I think would be hard pressed to point a finger at a market that's doing particularly well. So I think if it was slightly different, and tech stocks were rallying, and we weren't in this strange kind of hyperinflationary scenario, but it's kind of in line, I guess, with the kind of the rest of the macro play out there as well.
Yeah, and in this context of the sharp correction, we saw a major negative event some days ago. It was a collapse of Terra Luna, of this ecosystem of a stablecoin. And I would like to ask Hani Rashwan, maybe you explain a little bit what happened there. I don't know if everyone here in this audience is well known with this Terra Luna thing. And you also have an ETP on this cryptocurrency Terra Luna, which collapsed, like 40 billion wiped out over a day in this cryptocurrency. So it's a major thing. And I would know, how did you deal with this situation as a provider of a Terra ETP?
So from the product perspective, the product did as it was supposed to, which is follow the price of the underlying, even in some incredibly difficult and challenging circumstances. And we worked with some of our wonderful partners on the liquidity side, including flow traders, to make sure that orders were happening and were capable of happening throughout that entire difficult time. At the moment, the ETP is still up. And what we've done is new blocks were intermittent. They were not consistently being made. The blockchain was not up and functional and operational for quite some time. And so what we did is we kept the product up because we noticed that no one was really selling out of it. People were holding. And in fact, as Ed knows, we saw some inflows in the product later in the week, actually. And so what we wanted to do was ensure that the product is up, ensure that the investors who wanted to keep Luna were able to do so. But we stopped quoting it because at various times it was no longer really available on exchanges and we couldn't source the underlyings. And so that's what we've done. We've suspended the quotations while we see what's going to end up occurring. There are a number of potential fixes that the organizations behind Luna and the Terra ecosystem are working on, including a copying of Luna into something called Luna Classic and thinking about a potential Luna 2.0, and it remains to be seen whether that will be successful or not. but we navigated, I would say, rather successfully the ETP during these incredibly challenging times. I do think that it is worth taking a step back and really thinking more about what Luna is and what the opportunity was and how this happened. And the truth of the matter is that this was an elegant experiment, and I believe a worthwhile one, in my own personal thoughts here, to create an algorithmic peg to some value. In this case, it was an algorithmic, non-collateralized bet to the US dollar. The way it was thought of was, again, elegant and unproven, with many risks that our own research detailed in the product as we put it out. But the end goal was not nefarious. It was actually quite worthwhile. Now, I wish that this experiment, which was supported by some of the top investors around the world, lost 40 million and not 40 billion. And I wish we figured that out in slightly less damage. But overall, it's just important to realize that, especially for some of the alts, we should be experimenting. We should be trying things out in this manner, and we should not attack failures. It is very much key and parcel of innovation and of pushing this forward. And so lots to talk about Luna. Happy to talk more about it. It was a long 10 days for us, I'll tell you that. But overall, I would say ETP performed as it should have. The Luna ecosystem is rapidly trying to figure out what's next and has given some early but encouraging signs. And again, it's my personal opinion that trial and error, especially if going after such audacious goals, because the concept of an algorithmic peg is a bit innovative, are worthwhile endeavors.
Yeah. I would like to hear your opinion about the trust in the cryptocurrency sector, because do you think that the Terra collapse still have long-lasting effects on the crypto market, or is it just a short-term event that in some months, everyone will have forget?
Well, one can be of two minds at this point. It feels a lot like 2018 in May, and it feels very much like 2014 in May. In a sense, this market is cyclical. We saw a massive run-up to all-time highs in November of last year. The space has never been bigger, right? For folks who have followed this space for years, finally, we sit there and say, that's a fact now. It's grown to this size. No, it's not going away. And then things can't go up forever. You end up, and this is the other way to look at it, you end up with this drawdown. Well, it's trial and error, this space, isn't it? And we see experiments succeed, and we see experiments fail. And so I sit here now at this point and look forward and think, well, here's a space that's never had more venture capital injected to it. More venture capital went into this space last year than the 6 previous years combined. So what's different to 2018? Well, the ICO boom and bust is very different to what's happened now. The amount of risk capital that's gone into the space is unprecedented. You've really got to sit there and ask yourself the question, do you think this is going to entirely disappear? The whole space? Gone. Because if you do, that's fine, you're part of the 20% who responded to the survey, and you don't need to listen to us anymore. But if you do think it's going to stick around, then the question you have to ask yourself is how you get diversified exposure across the ecosystem so that you're able to catch the next wave of opportunities that $21 billion of venture capital deployed so far is going to create over the next 18 to 24 months. In a way, I was at the Ethereum Dev Connect in Amsterdam about a month ago. I contrast like the incredibly bearish and negative sentiment that I see from folks in the financial sector who turned up yesterday and didn't see the last 8 years. And I contrast that with the 5,000 open source developers who descended on Amsterdam for a whole week to build things. Hey, you're going to bet against 5,000 open source developers? Good luck, because they're going to build something, and that will be the next set of opportunities that this space will offer.
Great. And now we could also see that the correlation between cryptocurrencies and tech stocks is at an all-time high. And they would like to know, do you think that we get used to this high correlation between tech stocks and cryptocurrencies, or is it just temporary? Feel free.
I think the narrative over the last few years, or I guess 3 years ago plus, was always old crypto or Bitcoin in particular is this uncorrelated asset. It's deflationary by nature, so shouldn't operate in the same way. It's this very unique asset, this store of value, often referred to as gold 2.0. And I think what has evidently shown us over the last few years that actually there are some strong correlations to the tech market, and it is very technology focused. But that comes as no surprise when as Ben's saying, the amount of we're talking billions which has been put into this ecosystem, which is largely it's technology. Often I get asked, by people, why would one buy Bitcoin, or what is about Bitcoin? And obviously, at Flow Traders, we're not in the business of kind of promoting certain assets or anything like that. But in previous roles and companies, I have been, and I think for me that Bitcoin is often, and this actually holds true for other cryptos, but Bitcoin is often referred to as it's the internet of money, and we've got to remember it's a protocol layer. So back in the day with the .com boom, there was IP, internet protocol, and the best way that you could get that kind of exposure to the internet protocol was to buy equity in a .com stock. So already you kind of got this tertiary exposure because you're having to buy equity in a company, and the company does stuff with the internet, and that uses internet protocol. Well, Bitcoin, or the protocol of money, which actually uses an algorithm called SHA-256, if you buy a Bitcoin, you are buying a token which is actually Delta 1 exposure to that protocol. So from a technical standpoint, it does actually make sense that as tech evolves, as there's more money going into the ecosystem, greater utility, we do see these higher trends of correlation. And that's probably, I think, something that has just grown and probably will continue to grow over the next few years.
But doesn't that mean when we see continuing the rise of key interest rates that cryptocurrencies have to suffer like tech stocks? I mean, there's no end right now. We could see with this interest rate, with the inflation.
Well, if something's correlated, it's not just a one-way street. If it goes up, they go up. Also, if it goes down, they go down. So, I mean, that's kind of the nature of correlation. Otherwise, it's not correlated. So, yeah, I think that is fair to say. And we are, back to our comments earlier, we are seeing the fact that, on a whole, it is a relatively bearish macro environment, and I think that's then reflected in the fact that Bitcoin's trading around $30,000. The overall market caps of cryptocurrency is lower than it was 12 months ago plus. So it's that is not a surprise, and I don't really see anything that might change that decoupling. I think the certain assets within the crypto ecosystem definitely have an opportunity to maybe break away and have less of a correlated standpoint. But yeah, other than that, the correlation is probably likely to hold.
Okay.
I see it's exactly the same there, especially people that are longer in crypto space always asked for institutional money, for crypto money. Now we have it in the crypto space, and the institutional and the investor money is there, and therefore it reacts like a high-risk asset, which it still is. And therefore, I think the correlation will also stay for a longer time, because we have that traditional money that is happy to go in this risk space. But on the other side, therefore, they have to sell it. If markets goes down, they have to de-risk, and therefore, I think we will see that correlation for a longer time.
Okay. I see some critical questions are popping up here. I would like to ask, someone asked, try and error with that much money is quite cynical to say. What is your opinion on the argument that there's no real value behind cryptos? I mean, I heard it so many times, this argument, there's no value. What's your answer?
Well, I get this question quite a bit. And this person doesn't realize that there's more to the market than Bitcoin. Newsflash, Bitcoin is approximately 40% of the market capitalization, the entire digital asset ecosystem. If we were having this discussion 4 years ago, we would have been talking a lot about Bitcoin. However, in that time, given the time and effort that people have put into building software, we can now have a discussion beyond Bitcoin. That includes Ethereum, which has its own monetary policy, which is very different to Bitcoin. We can talk about the alternatives or competitors to Ethereum, and you better believe it's a highly competitive space there because the Ethereum ecosystem is now so many applications built on top of the Ethereum network. It's roughly 40% of the space, so it's basically that of Bitcoin. Those kinds of tokens, they're not, the monetary policy is entirely different. One can get a cut of trading fees on DeFi platforms. One can send what are so-called stable coins, US dollar pegged tokens. You can do it on a mobile native platform that's open 24/7 and globally accessible, just like your bank, except it is actually global and it's 24/7. The point is, there is much more to the space than Bitcoin. Anyone who uses these applications knows what kind of value it provides. That's often in terms of accessibility, speed, and cost relative to the traditional financial system, which is not internet native and really is quite archaic when compared to these open source software protocols that now you can access from your cell phone.
I also think by the numbers, we can look at apps development, we can look at the ecosystem of smart contract protocols, and Ethereum and Solana and others like them can be treated like companies with earnings, in that the network is earning on a per transaction, per contract, on a daily basis. It annualizes to something that makes its market cap make sense with a good multiple, and so on. And so the concept of there's no value being created here is quantitatively false. And in fact, we have seen tens of billions, low hundreds of billions of value being created. Now, obviously, there's inflated values in pockets of the market, but overall, for the big assets, for Ethereum, for Solana, for Bitcoin, for Avalanche, and for all of these assets with incredible teams behind them and big visions, value is being created, and it's very, it can be very quantitatively and precisely measured as well.
But still, when it comes to cryptocurrencies, you have always these doubts from investors about regulation. So I would like to know, is it already enough regulation? Is it enough certainty we have in this space, or do we need more clarification on, in a regulatory framework that the nations, the governments, the authorities give the space?
It depends on which part and sector of the industry you're talking about. I would say that there are a lot of areas of the industry that are supremely well regulated. We have a lot of ETPs, and we think that they're pretty well regulated and offer investor protections and superior structures and so on. There are other parts of the market that are a little bit early, and maybe the development cycles are much faster than the regulatory time clocks. But we would expect and welcome additional regulations in the parts that have not been touched as much. And overall, I think any major player in the space welcomes regulations. There are very, very few players that are against it, whether or not they are based in the West, and I think that says a lot. We are having remote companies that are primarily based in jurisdictions which would not be under the purview of European or American authorities that are also clamoring for and pushing for regulations. And so there's plenty in a lot of pockets, and I would expect more, and that would be a very good thing when we would welcome it.
Yeah. Now, we talked a lot about the markets, about the investment situation right now, but now I would like to focus more on the product side. I see many questions here about the ETPs, ETFs, and that would be also my next block here. And therefore, I would like to start with the ETFs, crypto ETFs. We don't have them in Europe, but in the US, there is a future-based Bitcoin ETF already out there. And I would like to know, what do you think about this product, this future-based ETF? Is it a good one, or are you critical about it?
We haven't launched a futures-based ETF in America, and we totally could have. We actually we applied for one and pulled our application because it became very clear that the rollover contango effect would cost a pretty penny. It was annualizing somewhere between 7 and 18% at one point. We're big fans of selling $10,000 worth of Bitcoin for $10,000 minus fees. And that might be a controversial opinion with some of our competitors and some of these products we've seen. But that did not seem like the proper structure. And ultimately, I don't think that's what investors are looking for either. They're looking for neutral access to Bitcoin on a one-to-one basis or whatever other crypto assets. And so we remain super committed to bringing an ETF out in America and everywhere else that would be accepting of that, but it just hasn't happened yet. And then on the European side, the only reason we don't have ETFs here for things like Bitcoin is the diversification requirement, where you cannot have an ETF on a single asset. We could have indexes like that, but the exchange-traded product structure, especially here in Switzerland, which is akin to an exchange-traded commodity structure, we think is absolutely perfect for investing in cryptos.
Mm. Now, these ETPs as a securitization have like a bridge opportunities for many investors who don't like to invest directly into the token, who don't want to have a wallet. And I understand this completely, but when we look a little bit more into the future, can't we assume that all assets will be tokenized, that this will be the normal standard? And my question is then, what happens with all these classic Delta One ETPs in a classic securitization? Is it the end for them?
So I think when you introduced me at the beginning, I was CEO of 2 brands, and that is precisely why. We have an ETF issuer called 21 Shares, and we also have a tokens issuer called Amoon. We believe every asset in the world is going to be tokenized within a decade or so. And that will apply to every equity, stock, bond, commodity, etc. Every one of our basket products, every one of our indexes, at some point there will be an index token on-chain that represents the index. And it can still be physically backed. It can still be constructed between the 2 worlds, where it's both in the traditional financial world but built on crypto infrastructure. And so I'm of the opinion that everything is going there. And for a lot of people, I think you'll end up using crypto and DeFi infrastructure without realizing it, because it can exist within your existing interfaces. And that will be something that we'll start seeing, and we're building towards that vision, and we remain very excited about both the traditional financial worlds and ETFs and ETPs, as well as the future tokenized world, and index tokens and leverage tokens and all the like, and then especially stitching the 2 systems and bringing it in one place. You'll see a lot of cool stuff.
Together is something really amazing that will happen there. We will see in ETPs, but also in tokenized products, assets that are not accessible today, that are not able to be packed in a regulated and clear product, and that will be amazing. It will be a huge opportunity for all of us to build new products, to give investors access to assets that are not accessible at the moment. And there, blockchain technology, tokenization, and also products like ETPs will offer a huge opportunity to all of us.
There was a question from the audience I saw before, which asked that most of them are single crypto ETPs, not diversified ones with baskets. I mean, I guess there are some basket ETPs already now, but maybe with this in mind, what are the product innovations maybe we could see with ETPs, like, I don't know, leverage or other strategies that these products can build?
We think there's a lot of very interesting possibilities. Our first product, which was the first physically backed crypto ETP globally, was a basket of the top 5 assets, and it remains an incredibly popular product. It's a good way of diversifying, and it's a good way of more thematically purchasing certain things. I think we have baskets on certain themes, including DeFi, and we'd expect to see more. There are a couple of trends that I think make a lot of sense in the current climate, and we'll continue to push and release those, including some income-generating and especially yield-seeking ETPs. And so just a couple days ago, we launched USDY, which is a USD yield ETP with over-collateralized lending in the background that generates a 5% annualized interest on just normal US dollar exposure. We would intend to see more of these kinds of products, perhaps some risk-adjusted indexes to protect the downside and things like that this year. But I think it's absolutely the year of yield. It's the year of income generating, risk-adjusted kinds of product, as well as more derivative types within ETP worlds, although we haven't done too many of them.
So are these kind of products maybe a real alternative to bonds maybe, or dividends in the future?
No, I think is the short answer. I don't think anyone's all of a sudden going to dismiss the credit markets in favour of a yield product, although I do think it's a very nice product. I think ETPs often people will get asked why would someone buy the ETP, and I think it's already been mentioned. Often an investor will turn to the ETP because look, it's a simpler way for them to get that delta exposure. For example, in the basket product, they don't have to go out and buy, say it's got 10 constituents, they don't have to go out and buy each 10. This is the traditional ETF market argument here. This isn't anything new. So they can get that exposure. We talked about regulation. It's something that is structured, it's regulated. Many have tax advantages as well. They're traded on the exchanges, the legacy exchanges, like SIX and others, which people are used to trading. The pre and post trade user experience, for want of a better word, is the same. It's bought through your broker, your asset manager. So it's not new there. You don't have to deal with wallets. So these are the reasons why I think ETPs lend themselves. And if they can then capture some of these innovative components of the crypto or digital asset markets, whether it's yield or staking or yield farming or exposure to a subset of type of blockchains, whether smart contracts, payments process like Pico payments derived blockchains. That's really where they hold their own. It's not coming to try and steal and eat the lunch of the credit market. I think that's a bit too far-fetched.
With look on the monitor, someone heard that cryptocurrencies are used for illegal activities. This is something I heard many times. I think everyone here in this panel knows this question, but nevertheless, I would like someone of you to answer this question. Is it correct? Is it so badly darknet money for illegal transactions or not?
Well, I mean, the age-old one is, the number one currency to buy drugs is something like the US dollar. So, it's not really one that holds up. I mean, you get a bit kind of tired of this. Having left a career in traditional finance some 8 years ago to go work, I've had it all. Funding terrorism, dark web, illicit means, all of that. And no, I mean, I think in early days, actually, the number one use for cryptocurrencies was actually for philanthropic reasons. But hey, that doesn't make the headlines, does it? What I think there's a huge issue in the crypto markets around the lack of education and understanding on the level of transparency and surveillance which is actually applicable. So companies like Elliptic, companies like Chainalysis, who do this, what's called blockchain forensics. Bitcoin is actually the worst asset I could probably think of to launder money or do something illegal or illicit with, because from its inception, you can see exactly where it's come, where it's originated from the first block in which it was mined, all the way through to where it ends up. So, I mean, in short answer, no. Yeah, it's not a currency for illicit means, and yes, I'm sure there are some people that a very small percentage are using it for such, but yeah.
Yeah. Okay, so thank you for your clarification. And I would like to focus on narratives. So there's one narrative that Bitcoin is a digital gold, which is kind of problematic right now. When we look back to the last weeks and months, it doesn't behave like gold. And there's also the narrative as an inflation hedge, which doesn't work out as well. So what's behind this narrative? Are they still, maybe in the long term, have they the reasonable existence, or is it just wrong?
I think there are a few ways of looking at it. First, if you compare Bitcoin with gold, I don't think that's an unfair comparison. I just think that before gold became the store of value that it was in the traditional financial system, it experienced about 10, 15 years from 1971, when Nixon took the US off the gold standard, up until about 1985, gold would swing 90%, down 100% on an annualized basis sometimes within those 10, 15 years. And what it was called in retrospect is an emerging store of value. And so it's very possible that we get to gold 2.0, and there are a lot of cases for it. It's more easily divisible, it's more easily transportable, it goes out in so many ways against gold and wins on a feature list. But it may still be a little bit early there. And the good thing, I would argue, for emerging stores of value is that they tend to provide venture capital kind of returns until they stabilize. So it's not too shabby to get involved there at the very beginning. And that's how I think about that aspect, comparing Bitcoin and gold. I think in a risk-off environment, there's generally speaking a flight to cash, but even in the last week or so, we've already seen a decoupling of the crypto markets with the traditional equity markets. And I would expect to see more of that once things calm down a little bit, and some of the irrationality that we're seeing subsides just a bit. We're having situations where Snapchat has a bad earnings report, and for some unknown reason, Google goes down as a result of that, even though the connection is very, very small. And so it's still quite irrational. And as things cool down a bit, I would expect the lack of correlation with equities to go higher, not lower.
I think just to jump in on the gold 2.0 tag also is something that's not talked about probably enough is there is, especially like Bitcoin, there is a finite number of Bitcoin that will ever be, as with gold, there is a limited supply. So with Bitcoin, 21 million, and when you then look at some of the analysis that can be done, like stock to flow ratios in terms of how much Bitcoin is mined each year, how much is in free float, these actually are quite interesting metrics for market participants to follow. So I think that's something when kind of looking at it, it's not just about, okay, is it a dollar hedge or inflation hedge, or is it going to perform the same way as gold or other precious metals markets, but actually looking at it from a bit more kind of holistic standpoint as well.
Yeah,
and I think there's an also really important point for me is that I would like to bring in, and also to answer the question that was there pointed to me. It's we are in a more and more digital world. Everything is digital, everything is agile, everything is 24/7. We therefore need assets that are also digital and even decentralized, that are not controlled by central entities. And therefore, I'm very positive that in that way, crypto is the right investment to go in that direction, because we can already now pay everything with PayPal and Revolut and everything, but they are all centralized and they have really the single point of failure. And in the blockchain world, we do not have that. With Bitcoin, for example, we do not have that. And exactly that's why I personally think it can and it will be a digital gold, because in this digital world, it will be a safe haven we can go in and we can be there. And it will also, from my perspective, be in the future an inflation hedge, but it will take its time.
A big topic, as in our previous panel, is the question of sustainability. And there we have the problem that Bitcoin consumes a lot of energy. It's criticized a lot because of that. And I would like to know from you how much ESG compliant could be investing into Bitcoin. Isn't it a big problem?
There are two pieces to this. The first is that the Bitcoin network uses perhaps 0.5% of the world's energy capacity. It's not very much, and about half of it is renewable energy. So there's that piece, but then again, to come back to this point, there's more than Bitcoin, and you're about to watch what's going to happen in the next 6 months. Ethereum is going to move from proof of work to proof of stake, and narrative shift is going to occur, because folks are going to point out there's more than Bitcoin. By the way, Ethereum's moved to this different consensus mechanism, which uses less energy than proof of work. And then you're going to find that suddenly a lot of the obstacles that people like to list around crypto, in inverted commas, are going to dissipate. Indeed, there is more than Bitcoin, and we can debate Bitcoin all we want, but 65% of the market that's not Bitcoin, and it doesn't have that same ESG trope attached to it.
But there are many initiatives calling Bitcoin to change its consensus mechanism from proof of work to proof of stake. We hear that many times, and I would like to know, is this realistic, this kind of demand, Mauro, or is it?
From my perspective, definitely not. Also, very short answer. It makes for me a lot of sense that this really big protocol, the mother of all blockchains, this digital gold stays with proof of work, because it's the only way that we've seen until now to really have decentralization. We see with the proof of stake blockchains, it's not not as decentralized as it is with Bitcoin. We see, for example, we as Bitcoin Swiss are an ETH 2.0 staker. We have a majority of the actually ETH staked in this blockchain with us. It's a centralized entity that does that. There are other players that do that. And with the mining or proof of work mechanism, consensus mechanism, you have a way bigger decentralization out there. Therefore, I think Bitcoin will stay with proof of work. The rest will all move to proof of stake.
And now we have talked a lot about Bitcoin, but I would like to focus now a little bit on the smart contract platforms. Ethereum is the number one. Do you think that Ethereum has to fear for its position as number one blockchain, smart contract blockchain, because we see Cardano, Polkadot, Polygon? So what do you think there?
I think, Ethereum has been a bit of a gateway crypto to the many others. You hear about kind of L1, L2 protocols, and especially in DeFi, decentralized finance. That again, Ethereum's been that kind of way in. And there will be something that, if that's your way in, it's also your way out. So I think there will be a point of reckoning around kind of a consolidation around Ethereum. I mean, one topic I think we touched on earlier was kind of around Luna and the price action, negative price action, and what does that mean for the market. I have a view from many institutions that it may focus a bit more around the kind of the majors or the L1 protocols, and rather than some of the kind of more esoteric alts. But one thing I would say, and this is one thing that I've really enjoyed about being in kind of the crypto or digital asset space over the last 8 years, it's extremely evolutionary and almost Darwinistic, and it's if it is the best protocol and if it has the following and it does what it says, it will emerge as kind of the dominant strand. So I think it's kind of the nice thing is watch this space, and what will be, which is really how true markets, fair and efficient markets should perform.
So time is running, but I would like to have a final round here, and therefore would like to return to our initial question. And the question was if 2022 is the year of widespread crypto adoption. And therefore, I would like to ask everyone of the panelists here to briefly say what they think is against it and what they think is in favor of it. Just what it comes into your mind shortly. Maybe, Mauro, you start.
Against is for me, in the end, just the macroeconomics out there. The world with the war in Ukraine, with high inflations and everything. And on the positive side, we see, as mentioned already, a lot of developers working on it. There are way more and more coming in, and no one is leaving. Everyone that went down that rabbit hole stays there. And a lot of things are built out there, and they build the future of our financial world, but also from many other sectors. So therefore, I'm very positive there.
My answer is no, 2020 is not going to be the year, because you can't just take that snapshot. We talked about it already. I think that point of inflection has been passed. It's here to stay. And this is, just a continuation of the journey. We at Flow Traders, we really strongly believe in clear, transparent, and fair markets. We will do our part to kind of engage with, with regulators, with exchanges, with issuers, to try and build out this ecosystem, and look forward to doing so over the next few years.
In terms of against, it's really hard to write software and to come up with novel ideas. In a way, the issue is around cybersecurity. You can go and write all kinds of neat ideas up in software, but slip in a few vulnerabilities in the most adversarial software environment that I can think of, and that's really tough. On the other hand, the plus side is we're here. Like, we're in the SIX exchange in Zurich. This was not happening 5 years ago or 10 years ago. To have come this far, I mean, the fact that the Bitcoin network keeps popping out a new block every 10 minutes on average is really kind of the highest level of fault-tolerant software design outside of NASA. It's really amazing that we've come this far, and there's so many people who are building. Like, there's so much more to come. It's heartening in that sense, though. As we've said, there'll be plenty of trial and error as we go along.
I'll change the question a little bit. I think the 2020s are going to be an age of widespread crypto adoption. I would argue that we've seen a lot of progress so far. Very great points that were raised. We are no longer talking about crypto not being here. And even the most bearish of analysts out there are still predicting a price that puts Bitcoin in the hundreds of billions of dollars in value, which I think is something. So we're here to stay. There's a ton of progress and developments that we and others like us are really excited about working on and sharing with the world soon. And it's going to be a hugely important part of technology and of our world over the next 10, 15, and 20 years.
Nice words for the end. That brings us to the end, and I would like to thank our experts for the valuable input, and I hope that you, dear audience, were also able to take some insights from this panel discussion. Thank you very much.